I bid you all good morning, good evening, good night, wherever you are watching this transmission. It is I, Mike Martins, broadcasting from Merrick, British Columbia. We got a zero hedge article, man, and it is a big deal. It is a big deal, and it's something we've been talking about the channel, market melt-ups. I did a YouTube video even a few weeks ago. I even did one a year ago about China's housing melt-up and then housing melt-up before the crash. I did 2 weeks ago, so if you guys are following me for the housing too, well, this is in the stock market. Everything's being melted up. Everything's being severely overvalued. We know this already. The biggest stock market melt-up in history has pushed prices to the most overvalued ever. Over the past several months, we have witnessed one of the greatest stock market rallies in American history. The S&P 500 has gone 70 days in a row without a 1% loss. That's a big deal. And that's a big deal for investors. If they're in the right commodities or they're in the right sectors, they're doing well. And most weeks we have seen one daily surge after another. If stock prices were exploding because of the underlying U.S. economy was performing extremely well, we would have a reason to celebrate. Unfortunately, that is not the case at all. In fact, last week I shared 12 signs that the economy is actually slowing down substantially. Instead, this stock market is melting up. This is being largely fueled by reckless intervention by the Federal Reserve. The Fed's balance sheet has been ballooning once again, and investors know that stock prices tend to go up significantly when this is happening. So right now, Wall Street is in the midst of a raucous party, a raucous party. Raucous party, and everything will be wonderful as long as stock prices continue to move in the right direction. So guys, I don't know if you've been watching the markets this morning. I've been watching the markets this morning, and I've been watching what's been happening on the back end. I do invest in the markets myself, kind of, play the game too, you know what I'm saying? Unfortunately, no stock market rally lasts forever, and the day of reckoning is coming. At this point, stock prices have become so absurd that even the New York Times is saying that we should worry about what is ahead. So I guess when the New York Times is starting to kind of have to weigh in on it, right? So you start to notice that once the mainstream media or the whole fake news guys start to weigh on the problem, they start looking at it at a different angle. We also witnessed dramatic stock market melt-ups prior to the stock market crash of 1929. Prior to the bursting of the dot-com bubble, prior to the financial crisis of 2008. If you are not familiar with the term melt-up, this is a pretty good definition. Investopia. I think I brought this up. What's a melt-up? A melt-up is a dramatic and unexpected improvement in the investment performances as an asset class, driven partially by a stampede of investors who do not want to miss out on the rise, rather than fundamental improvements in the economy gains. That melt-up creates a considerate to be unreliable indications of the directions the market ultimately headed. Melt-ups often precede meltdowns. So this is kind of interesting. Let me go to this really quick. In history, because I read this from Investopedia too. I actually read that the melt-up, the article I was reading didn't talk about melt-ups. I called it a melt-up myself. And then I read from Investopedia, melt-up, see? Melt-up definition. I actually read the same definition. Right there. Investment performance and the economy. Wow. So, am I secretly working for Zero Hedge? Who knows? That definition accurately describes what we are witnessing on Wall Street right now. There has been so much euphoria, and of course, many of the wild-eyed optimists seem to think it can last indefinitely. Yeah, right. But how But people will start extrapolating any profits, and it's you're going to see, don't worry. But how much higher can stock prices possibly go? That's the key question. You're probably watching this video to find out why. After all, they already the most overvalued that they have ever been in all of U.S. history. Well, guys, take a step back. Housing severely overvalued than it's ever have been in the Commonwealth, in the history of since the founding of the invention of the wheel. It's since the time of Moses. It's been so overvalued in the last decade. It's been phenomenal. It's left so many people out of reach. It's left so many people basically every man for himself. It's turned family members against each other. We sold out to the highest bidders. We have bidding wars with foreign investing coming in and buying properties and pushing up the prices, turning our cities into empty shells. And for what? And now what's happening now? Someone's got to pay the piper. He's waiting to get paid. He's been playing for 10 years now. A very simple way to judge whether the stock prices are overvalued or undervalued is to look at the price to sales ratio. And I look at that a lot when I'm looking at my stocks or looking at stocks. For the S&P 500, the whole thing, during the best of times, it should be somewhere between 1, 2, and 1.0 and 1.5. But thanks to the observed rally on Wall Street, has been enjoying a price to sales ratio for the S&P 500 has now been pushed above 2.4. If you would like to see what this looks like for yourself, check out this chart from Zero Hedge. We actually covered this too. There it is. So it's going back to 95 was the last time it was going this nuts. And then look at the 0809. Boom. Stock prices should have never, ever have gotten to this point without significant underlying sales to justify high valuations. Now, some of these companies, let's look at some of these companies out there. If they were to sell all their assets, everything they have, all their licensing and everything they have, basically thrown at the company, everything that's been building over the years of the companies, they still would be at a negative if they were to sell all their stuff. If they were to sell everything, basically, if the companies were to sell out, they still be in a negative position, is what I'm trying to say. If the S&P 500 were still to fall 50% from the current level, that would put us at a point that is relatively normal for good economic times. So again, if the S&P 500 were to fall 50% from the current level, that would put us at the point that is relatively normal for good economic times. I have to repeat myself there twice because a lot of people are watching to find out, yes, 50% overvalued. But, of course, our financial markets would not be able to handle 50% decline in stock prices because the system is so highly leveraged, it would be a disaster unlike anything we have seen before. And so the Federal Reserve feels as though there is no other alternative other than continue to pump up this absolutely absurd, crazy, off-the-charts housing bubble. I had to add a few words in there. Another very simple indicator that shows that stocks are now more overvalued than ever before is the Buffett indicator. Oh, yeah, we talked about that like 2 years ago. As Harry Dent has pointed out, the ratio of total market capitalization to the U.S. GDP has never been higher than it is currently. You can see this for yourself by looking at this chart. The stock market would have fallen by a third just to get back to the ridiculous level we witnessed just prior to the financial crisis of 2008. So here it is here. Right there. Where was I? We truly are in an unprecedented territory, and every other stock market bubble of this nature in our entire history has ended very, very badly. If you want to blame someone for getting us into this precarious position, you want to blame the Federal Reserve. And at this point, even the Fed officials are acknowledging what is going on. For example, just check out the Dallas Fed president's report from Kaplan recently said. So he's got a little blurb here. It was at the very least a little refreshing to hear Dallas Fed president openly talk about this interview on Wednesday, although he did couch it in terms of implied it was a matter of some concern to him. But of course, he went on to say, we've done what we need to do up until now. So, yeah. My own view is it's having some effect on risk. Kaplan said it's a derivative of QE, and now we buy bills and we inject more liquidity. No, remember stock buybacks, buying back, and then now injecting money into the overnight rate. Remember, guys? So, and lending on assets that I feel that are causing repo strains and all kinds of problems in the markets. This is why I say growth in the balance sheets is not free. There is a cost to it. The Fed is desperately trying to keep control of interest rates, but in the process, they are creating an ideal conditions for the stock market crash. A 2019 roll down event, even Wolf Richer admitted, and I covered that too, there has never been a better setup for a bigger or better setup for a major market meltdown. In my decades of looking at the stock market, there has never been a better setup. So remember, guys, we covered on the show, a perfect storm is coming. Been saying it for years now. A perfect storm. Exuberance is pandemic to and sky high, and even after today's dip, the S&P is up nearly 29% for the year, and the Nasdaq 35% despite lackluster growth in the global economy. And many of the S&P 500 companies are getting the majority of their revenues. That's damaging. Mega weight in the indices, Apple in a good example. Shares soared 84% in the year, though its revenues ticked up only 2%. I'm sniffing some empty shelling of companies, stock buybacks. This is not growth. This is not a growth story. This is an exuberance story where nothing happens in reality, such as lacking revenue growth, matters as we're now told by enthusiastic crowds everywhere. Meanwhile, the real economy just continued to deteriorate. While stock prices were soaring in December, U.S. freight volume was actually plummeting. This is another one, guys. There it is. Freight recession. We're going into a freight recession, and I'll cover this on another entire different story here for you guys, because that's actually a big deal. I was going to cover that a few days ago. I just didn't make. I got 3 kids. That's my and I'm a sole proprietor. So shipping volume in the U.S. truck, rail, air have barge plunged 7.9% in December 2019 compared to a year earlier, according to the Cass Freight Index for shipments. It was the 13th month in a row year-to-year declines and the steepest year-over-year decline since November 2009 during the financial crisis. As I have warned so many times, stock prices have become completely divorced from economic reality. That's the best way to put it. It's okay. That's the best way. Stock prices are divorced from reality. That's the best way to put it. Stock buybacks, printing money, fuel injections by interesting way of saying QE. Now they're calling it repo injections, and finding ways to stimulate the markets and keeping the rally going nuts, right? And the banks, and then lowering interest rates to artificial lows that we haven't in since the time of we've never lowered rates this low and kept them this low for this long. And look, we've created the Frankenstein monster, and look what's happening. And it's setting us up for more major financial crisis. But for the moment, the party continues to roll out. The wild eyes optimists are telling us that this is just the beginning of a golden age of prosperity. No, empty shells, empty shelling. This is from my man Tyler Durden from Zero Hedge. Go check out Zero Hedge. They're usually first on the scene when it comes to kind of breaking things down. And I try my best, guys, to be there for you guys too, as much as I could. Guys, don't forget to join the channel if you can, guys. Go to the bottom here. Look at that. Housing melt-up, guys. I did that in China's housing melt-up. I did quite a few melt-up videos because that's where Australian and Canadian household debt out of control. That's from a year ago. Like, there's some ones going back 5-6 years. You know what I'm saying? So if you guys can, I'd appreciate it for supporting the channel. And if you can, I'm losing a lot of subscriptions, not because I'm losing increments of subscriptions. I'm losing 100 a day exactly. And it's just showing 100, 100, 100 every day, 100 exactly. So I don't know if there's a unionized meetings of subscribers where everyone today we're going to unsubscribe to the Mike Martin's channel. Nobody unsubscribes to channel. I had Old Man, the channel from Old Guy there, he was telling me basically people don't unsubscribe, they just stop watching. So for you to receive 100 unsubscribe, and then I'm getting messages right here, so you know I'm not lying. I'm getting a ton of messages from people saying that they've checked my channel and then they've been unsubscribed. So guys, please join the channel and subscribe. If you want to get back at the established or the man or whatever you want to call it, or the platform, just subscribe to my channel. Just get back at them, because for some reason, where is it? Right here. Right here. Wait, I didn't put it in the... Oh, yeah, losing 100 subs per day. Remember? So that's me driving in the car there with my Wanderer's jacket. And people are saying right here, I've been unsubscribed a few times for some reason also. And he thought it was controversial channels too. I'm not a controversial. That's the thing, right? Very surprising also getting this. See? It's just Google being Google. YouTube is constantly unsubscribing me from my favorite channels. So the platform is going to lose. It's going to fall under its own weight eventually too. You'll see everything come down. And hopefully one day people will remember the effort I've been putting into this the last decade. And it all started with housing. How it was overvalued. How the average house in Vancouver was $600,000. I remember making those videos and walking the empty streets in Vancouver. And then now the same house is $1.4 million. Rich on paper, but the people that would have bought would have just tapped into that equity, so they would have been nowhere anyway. Unless they were smart, but they need to tap into the equity to keep their party going. So who's going to clean up the mess? The taxpayers, the working poor, are going to be the ones on the hook. Let me know what you guys think in the comments below. Thanks for watching.